Hello friends, this is Martin from Secret, the channel for learning about trading and investing. Welcome to another new episode of Markets Tomorrow, the daily market analysis show. We look at what happened in the market in the day and how we can plan for a better trade tomorrow. What a day today. It was a bear attack, right? It was bloodbathing markets in the market fall 2% down, right? So if you're not subscribed, please subscribe and share difference with everyone benefits. And as usual, we're going to analyze the pre-market analysis for on the market by Nifty and the BANKNIFTY. So that's for analysis for now. But the third Tuesday 2021, we will be looking at all of these parameters that you see, the handles, patterns, price action, and all of this on the left side, what you see there on the charts, and then we'll do a lesion analysis in the data. Right? We'll look at the open interest analysis, the volatility, FI participation, sectoral performance, and global commodities, and then wrap up the selections, right? So price patterns, 348 points lost, right? It's one of the biggest falls in recent times. So 2% is lost, and then it found a very wide range candle, right? So this is what you see. The candle, look at the candle size, big wide range candle with a small bounce, small wick, small means a small bounce that slightly longer wicks, which could indicate the recovery that happened. So it slipped off this 17600 first. Now there is a previous ring low. Then it took away 7500, which is Fibonacci support level. Then it took the support very close to 7250 level support, and then bounced slightly up. Then after 230. BANKNIFTY also 2.2%, 847. It went to 1250 kind of levels of dip, and then it recovered a bit and then settled at 850 kind of points loss. Wide range bearish candle once again, as you see, and then it managed to close about 37 somehow, although it had slipped the Fibonacci support of 37,500 once, right? So intraday what happens is this, right? It tried to move up from the previous close level on the 15 minute slow time frame charts, and then it was trending, big slip in the end of the day. It just made a few candles of recovery. Right, heavily bearish. Now if you look at the candle size of the first initial jump upwards, trapping the bulls, and then making the trending big downfall without non-stop, right? Bollinger Bands, if you see, you can see that both in the volatility expansion is happening on both left side Nifty and BANKNIFTY also. Clearly BANKNIFTY earlier, now the expansion is happening, clear bearishness is what you see from the Bollinger Bands, right? So cut this support and resistance levels now, right? Right now it is Nifty on the left side is showing that it is at a support zone of 7350, 450 kind of levels, and it has bounced from the 7250 to 7300 kind of levels, and then the immediate support below would be that. And if that is gone, then we have 70,000 kind of levels, and if that is lost, then it slip to 6900, which is Fibonacci 50. And then below that we have a gap support of 16,750, right? That's the downside fall levels. Upside, of course, all the previous support zones, which would have dropped would be resistance now. First would be 15,600 levels, and then above that 17,600 levels with the first resistance upside. After that you have 17,800 levels, and then you have the 18,000 K levels, and above that you have 18,100, 18,200, and then all-time high levels of 18,600 and just 18,400 also below. So all these upside resistances, and the BANKNIFTY similarly, if you see it as the immediate support zone would obviously be 36,900 and 37,100, that range. That slips from 36,300 to 36,500 levels, and then if that goes, you have 36,000 nearby zone, and then if that slips, you have 35,300 caps. On the upside, the previous resistances, supports will be the resistances now. The first resistance will be clearing the 37,800, then 38,000, and then above that you have 38,500 levels, and above that you have 39,000 range, and then above that you have 39,500 range, and 40,000, and 41,000, and then 41,800 all-time high. So upside and downside support resistance is what we talked about. All the bands we already discussed. This cleared bearishness, volatility expansion. So, you know, there could be choppy, volatile moves at this level because volatility is not skewed, it is expanded, but on the bearish downside, right? Momentum, and there is no divergences. Daily momentum, you can see that it has slipped to the bearish on Nifty, bearish on the bank closure. So momentum is lost, and it is below 40 RSI means clear bearishness on the momentum. Price and momentum both are negative. Trend indicators are showing that trends at DMI negative, Nifty and Bank Nifty. Short-term trend is bearish, and it is rising also. The bearishness is increasing. It's showing that is increasing what the green line indicates. Both in Nifty and Bank Nifty, the bearish trend is increasing, right? And weekly, for some reason, Nifty and somehow Nifty and Bank Nifty both the trend indicator, DXDMI indicators are showing that it's still in the bull zones, but across it is heading towards the close on. Because 3-4 days more where we will get the clarity will cross over. But short-term bearishness arising is what the trend indicators are showing. Volatility has in the range that it is 19 and then 15, and it has bottomed out, slipped slightly below the 15 previous day, taken about he had 18% of short of the VIX in the market fall. That's what happened today. So it's another confirmation that the range is between 15 and 20. That's kind of range that is going to happen, right? So volatility would be in this range. Now it may dip, but it's going to happen within this range. Now the VIX is now at near to 18 level, 17.9, 17.52 is where it's at, very close to 18, not exactly 18. IV is 15.14. Well, as per British ones, now 35% of IVP is there. The IVP also has increased. So premium should be okay as long as this 15 to 19 range is there, but volatility and choppiness can be expected further. Opponent analysis showing that left we have the bearishness before the expiry monthly. It's bearishness, so projecting the call writing is projecting more. You can see that the call writing is getting added at all these levels downside, right? Supports seen far away at 17,000 Nifty and then 17,400 also the put writing. Call writing seen at 18,000 major resistance and 7,800 also has got huge call writing. Opponent says short build up of used on the futures, and 0.5 is it's kind of bearish. Good call ratio. Bank Nifty is 0.49, again kind of bearish. Good call ratio, kind of short build up seen on the back. So levels if you see 37,000 and 36,000 is where the support is same. So whether 37 will be holding for this expiry is something we'll have to see. 38,000 and 40,000 as maximum hold, right? So in the Nifty, the fight may be whether it's possible to hold 17,500 or it will slip to 17,000 or not. That is the only question. Similarly, 37,000, will it hold that 37,000 of expiry may be the question for the Bank Nifty. Most likely, with this kind of chart patterns, it's clear bearishness and there's scope for further downfall. All sectors fall down today. You can see the IT close 0.5%. Momentum is sideways. Metal goes down. Right. Momentum is into bear zones. Auto goes 3% down. Momentum is sideways. Pharma close 1.75% down. Momentum is bearish zones. FMCG is 1.3% down. Momentum is sideways. Reality 4% down and lost momentum to sideways. So all the momentum is lost in all the sectors across. All are into sideways or bearishness. You just have to wait for that to catch up. Neither does it make sense at the support levels to go short on the sector stock loss. Institutional participation data is not coming, but it must definitely be huge. We'll just quickly check where it has come. Must be huge selling by Fyers for sure. We'll just refresh and see if the data is coming. No, it hasn't come as of now, but there's no point in looking at this clear bearishness. Selling will happen. The currency pair is hovering around the support zone, but the dollar is strengthening as you see in the dollar index charts on the right side. Right? Dollar is shooting up, currency pair is kind of consolidating the support zone. well below the 75 level. 75, 74.3 is what you see. It's kind of small body support consolidation that happened today on the sideways. Crude oil has cooled off and just come below the 75 levels, and it is, there seems to be some, well, it is taking the support of this zone. It has cooled off a lot, quite a lot, and momentum of that up move that went to 85 kind of levels has cooled off, which is good for us. And gold is facing resistance at this next resistance zone, right? And it attempted to crack that, but it is kind of facing resistance, and in the last 3 days it's kind of losing the momentum. Is what I say. But overall, it is bullishness. It's on the edge of the bullish momentum. Now ignore the numbers here, but let me just quickly go and see the Drawdowns. Right, it's showing a big fall of 200, but Nasdaq is kind of green, so it doesn't matter. It may not be valid. So no major big up more down mode is seen in the Europe, in the US markets and other markets. So let's check this basically before the pre-market, and if there is some big move that happens, 100 plus down more up happens, it will reflect in SJ also naturally. This has to be considered only if there is a big move that has happened, like 100 plus points up more. Then it will definitely reflect in our market also. But if there is a small move, even in this will not reflect the same in our markets. Actionables, this is a repetition, but last soft as can, because it's kind of it has taken a dip, and it has forming some kind of a range shift. So it's this momentum RSI is not dipping downward, then you can go down for this above the candle of today's high. Similarly, Apollo Hospitals is showing a bullish rose divergence with the prices going up and then momentum is going down. So good volumes, good trend, and good momentum. So clearly a bullish stock to pursue, but we'll have to draw the retracement and then make the entry on the daily candle, and then with tight stop losses at the support and resistance levels, right? So that's a two Apollo Hospitals and Bellas up to 2 picks. But be cautious because the market is slipping like anything. So tight stop losses are required whenever we are going for swing or pushing longs when the market is bearish, right? You have to be very careful because even if the stock is doing good when the entire market falls, there's a likelihood that it would fall as well. Right? So you have to be very careful, tight stop losses, and only if there is a confirmation of the bearishness above the previous close, you should take the trade. Actually, now to back up its moderate bearishness in the short term, is my view. There's clear bearish charts and clear momentum drop and the clear bearish trend on the short term in the sense of the daily time frame, and the institutional selling heavy. So there is the bias obviously will be moderate bearish. Why it is moderate is because still there is a chance, because 7% is a good decent correction, and 70,500 closure for the expiry monthly can happen. Although there is scope for further correction. So it's not heavily bearish, it's moderately bearish because we're at a support zone. Right? Decent correction has happened now. Now there is a bounce up and there is potential for that. Right? So that's my view for the short term. Volatile range today has proven that when it shot up 18%, the range of 15 to 20, that range is confirmed and is not planning to further down, is what we can see. So when the volatile expansion has happened, if you had taken current spreads and then back a positive strategy, it would have worked today, right? Now, payments at this range would be good enough for the option selling, but the volatility, sudden choppy swift moves, and reverses can also continue to happen. So always use hedge positions like country spreads or vertical spreads. Never go for naked trading, right? Go for option strategies always, right? So that your risk is always defined. That's all I have. I hope it helps to frame your own view for the market to make your trade for tomorrow. If you like it, then consider hitting the like button and share it to your friends and colleagues, and happy trading and happy learning.